Thank you for watching the Wealth Guard Show. I'm your host, Tom White. Well, we finally got the Fed to speak this week, the moment we've been waiting for, and it doesn't look like they're going to be doing much as they've passed the buck off to Congress, saying that they'll do what they can, but they're pretty much out of bullets. There's not a lot the Fed can do except continue purchasing our Treasuries. No QE3 on the horizon, though, and Congress is getting the ball now, so you pretty much know what to expect there. Not a whole lot, just some political posturing and such. Also, we've had the Hurricane Irene this week, affecting New York City, and hopefully everybody's been safe from that. Looks like the New York Stock Exchange will be open, though, as they still have power, and their only concern is whether or not people can actually get to the location. Also, want to thank everybody out there helping me out with my CFA, as I'm going to be trying to do this rigorous exam. It's going to take at least at the earliest a year and a half, more likely 2 years to complete. There's 3 phases of it, and you can only take the first phase and then the second phase after you pass the first, and of course the third after, and it's only given twice a year, so it's a big one. So I appreciate everybody's help. You can help out 3 ways: by watching this show, and this show and website makes money 3 ways. First, we've got your generous donations. We thank you for that. Up there on PayPal, you can donate. Every dollar helps. Also, we've got some lessons, $90 per hour for personal education to learn some of these techniques and how to apply them to your portfolio. And the third and final way is visit the website often. Come back here and check things out, and I'll let you figure it out for yourself. We're going to begin with these economic mechanics. And if you've been watching the show for a while, then you know our economic mechanics model is based upon 3 key principles. And first, the US dollar and commodities move in the opposite direction. And second, commodities and interest rates, they move in the same direction. And third, high interest rates, they're bearish for stocks. And we'll begin with the US dollar. And on the daily chart of the US dollar, down below, point number 1, those stochastics are bouncing off the 20 line, but they're not really doing much. They're going sideways. We gave this one a yellow mark. Above that, point number 2, we got the MACDs deflecting off each other here, and the histogram bars above that, they're just dropping from that 0 line again. As they're retreating, gave this one a red mark. Up top, the relative strength index is deflecting off at a 50 line, headed lower, gave this one a yellow mark. And on the weekly chart of the US dollar, down below, the stochastics continue bearish as they're declining toward that 20 line. We gave this one a red mark. And above that, point number 2, the MACDs are losing steam, and the histogram bars have leveled off too, so we gave this one a yellow mark. And up top, point number 3, the relative strength index is underneath that 50 line, moving sideways, and we gave this one a yellow mark. Also note, got a death cross by that yellow arrow, blue line crossed over the red, and that blue line is the 50-week moving average, and the red line is the 200-day moving average, 200-week moving average. Not looking good for the US dollar right now, as I expect a decline. Usually what we see after a death cross is a consolidation pattern like what we've got, followed by another sharp decline. And summing up the US dollar, we analyzed daily chart and the weekly chart. On the daily chart, stochastics were neutral and we gave them a yellow mark. MACDs were negative, we gave those a red mark. Relative strength index was neutral too, so we gave that one a yellow mark. Over on the weekly chart, the stochastics were still negative and declining, gave it a red mark. MACDs and relative strength index were neutral though, so we gave those yellow marks. So for a total, we got 2 red marks, 4 yellow marks, and 0 green marks for the US dollar. And now we'll look at the commodities represented by the CRB Index. And on the daily chart of the commodities, down below, point number 1, those stochastics are reaching into overbought territory, and they're losing a little bit of steam here, so we gave them a yellow mark. Above that, point number 2, the MACDs are still lifting up higher, and the histogram bars are rising still, so we gave this one a green mark. Up top, the relative strength index is challenging that 50 line. We want to see it cross decisively and move higher. For now, we gave it a yellow mark. Also note, we got a death cross at the yellow arrow here on the commodities. Now this is a daily chart, so it's not as significant as the dollar, which has got the death cross on the weekly chart, but we should expect at least a consolidation pattern on the commodities for now. And on the weekly chart of the commodities, down below, point 1, those stochastics gave us a bullish signal when the green line crossed over the red, and they're moving up a little higher too. Gave this one a green mark. Above that, point number 2, we got the MACDs. They're kind of still in decline here, but the histogram bars are rising higher toward that 0 line, so we gave this one a yellow mark. And up top, point number 3, we're challenging that 50 line again on the relative strength index. Want to see it cross there. For now, we gave this one a yellow mark. And on the commodities, we analyzed daily chart and the weekly chart. On the daily chart, we found the stochastics were neutral and we gave them a yellow mark. MACDs were positive though, we gave those a green mark. Relative strength index was neutral and they got a yellow mark. But over on the weekly chart, we got the stochastics. They were bullish. We gave that a green mark. MACD's and relative strength index over there, they were all neutral. We gave those yellow marks. And for a total, we got 0 red marks, 4 yellow marks, and 2 green marks for the commodities. And now we take a look at the 10-year Treasury yield. And on the daily chart, a 10-year Treasury yield down below, point number 1, the stochastics give us a bullish signal, and they're moving up toward that 50 line. This is bullish. We gave this one a green mark. Above that, point number 2, got confirmation of those stochastics when the MACDs crossed. The green line crossed over the red, giving us a bullish signal. And the histogram bars have lifted above 0, so this is positive. We gave it a green mark. Up top, the relative strength index. It's not looking as good as the others here, as it's below the 50 line, and it doesn't seem to be challenging it at this time. Also note that death cross that we got here, back where that yellow line is. See that period there, we had a little consolidation, and then we dropped off, and that's what you can expect to see on these death crosses. And over on the weekly chart of the 10-year Treasury yield, down below, point 1, those stochastics are in oversold territory, but they're not doing much of anything, so we just gave this one a yellow mark for now. And above that, point number 2, we still have the MACDs in decline, but the histogram bars, they look like they've leveled off here, so we gave this one a yellow mark. And up top, the relative strength index is challenging the 30 line right now, so we gave this one a yellow mark. And summing up 10-year Treasury yield, analyze daily chart and the weekly chart. On the daily chart, stochastics and MACDs, they look bullish, and we gave them a green mark. The relative strength index was neutral, so we gave that a yellow mark. Over on the weekly chart, we got the stochastics, the MACDs, and the relative strength index. They were all neutral, gave them all yellow marks. And for a total, we got 0 red marks, 4 yellow marks, and 2 green marks for the 10-year Treasury. And now we take a look at the Dow Jones Industrial Average. And on the daily chart of the Dow Jones, down below, the stochastics are bullish, and they just beat that 50 line. We like that and gave this one a green mark. Above that, point number 2, the MACDs confirmed the move in the stochastics when the green line crossed over the red, giving us a bullish signal. And the histogram bars, they rise above 0, and they're continuing higher too. We gave this one a green mark. Up top, relative strength index is challenging the 50 line like a lot of other things that we've seen. And we also have this death cross, another one here in the Dow. We just did this one just a couple of days ago, and that's bearish, obviously, and not liking the way that looks. But we got a pennant wedge here. Pennant wedge usually breaks out to either the upside or the downside on very high volume. So we're going to be looking for that volume closely. We want to see it break either, hopefully, the resistance line, which is the top yellow line on that wedge. But if it breaks that bottom line there, watch out, because we could be heading significantly lower once again, continuing this pattern of negativity. And on the weekly chart of Dow Jones, down below, point number 1, those stochastics are trying to give us a bullish signal here. The green line is starting to move into the red here. Looks like it's above it right now, so we gave this one a yellow mark until it moves up a little higher. That would be a big bullish signal if we can turn this one green. That could be a sign of turning things around. And above that, point number 2, we still got the MACDs in decline, but the histogram bars have settled, so we gave this one a yellow mark. Up top, relative strength index is bouncing up a little higher, and it's trying to challenge that 50 line here. It's got a little way to go. We gave it a yellow mark. And so summing up Dow Jones, we analyzed daily chart and a weekly chart. On a daily chart, things improved dramatically as the stochastics and MACDs, they were positive, and we gave them a green mark. Relative strength index was neutral. We gave that a yellow mark. Afraid of that death cross, though. We're going to watch for that closely. On the weekly chart, stochastics, MACDs, and relative strength index, they turned in all neutrals. We gave those yellow marks. And for a total, we had 0 red marks, 4 yellow marks, and 2 green marks for the Dow Jones. And so we've been coming up with scores for the US dollar, the commodities, 10-year Treasury yield, and Dow Jones, looking for where the strengths are and where the weaknesses lie. We did that by analyzing the number of positives and weighing them against the number of negatives and coming to a conclusion that way. And this week, in first place, it was a tie. The CRB Index, the 10-year Treasury yield, and the Dow Jones, all with 0 red marks, 4 yellow marks, and 2 green marks. The US dollar came in last place with 0 green marks, 4 yellow marks, and 2 red marks. Right now, things are just absolutely stacked up right now, looking for direction. The dollar is the only thing giving us a clear indication, as that appears to be heading lower. That hopefully will start to drive those commodities a little higher here as they move in the opposite direction, and that would be confirmed by the rising interest rates that we've been seeing. And we take a look now at our market gauge. The object here is to be as far in the right column as possible in bullish territory and as far away from the left column in bearish territory. And in first place, as we said, we had the commodities, 10-year Treasury yield, and Dow Jones all stacking up in the same spot. Right now they're between neutral and bullish. The US dollar is in last place, and it's moving toward the bearish territory here. And as I said, what I expect to happen here is the dollar, if it continues lower, and I expect it will, the commodities should push a little higher here as they move in the opposite direction, and the 10-year Treasury yield and the commodities move in the same direction, so I'd expect that to move toward the bullish territory. And the higher interest rates, they're bearish for stocks, so I'd expect if that happens and the interest rates start to move into bullish territory, that's going to drive the Dow Jones back down. And we are seeing some of those, that wedge that I talked about. We're also taking a look at the death cross that just happened there as well, so this one could be very challenging moving into this week, so we'll have to wait and see. But for now, I'm not going to get back into stocks. Once again, this is like 5 weeks in a row now that we've been out of stocks, holding on to a 14% gain. We got out when this economic mechanic model indicated that a short-term bearish signal was coming, and it's been 5 weeks now, and that's certainly not long-term, but that is significant. It was good to avoid that and hold on to our gains. We're not going to get back in, though, until we've got decisive evidence here that's clear that we're going to be moving higher. And right now, we still just don't have that. Things have improved, but just not enough. We need more volume, and we need to see the Dow Jones continue on with several strong days on that high volume without going down. Well, that's all from our show again this week. Tune in again next week when we do it again. We'll be doing a daily show, too, so you want to check back wealthguardshow.com every day. We're going to be doing 3 up and 3 down, covering the Dow Jones Industrial Average on a daily basis. On Friday, we'll take off because we're going to be building this show. Also, I want to thank everybody helping out for the CFA exam. It's a rigorous exam, and something that's going to take some time to prepare for, so I need to get that done as soon as possible. Well, tune in again Monday, tomorrow, and we'll see you then. But for now, I'm out of here.